Hi, this is James Shrug with Westpac London's end of day report for Friday, February the 8th. Positive day on European and US equities today. The Chinese trade figures at the start of the session were positive. That gave an early boost to markets. Earnings reports out of the US, some second-tier companies. Nevertheless, they were helpful, better than expectations. And the US data flow included a sharply narrower trade deficit for December, actually down $10 billion to $38.5 billion in the last month of last year. About a quarter of that deficit reduction was related to oil prices and volumes. Exports were up more than 2%, imports down almost 3%. The net exports drag on Q4 GDP growth, which was about 0.25%, will almost certainly be revised to less of a drag, so prospect of an upward revision to the slightly negative Q4 GDP outcome. We also had Canadian trade figures. Their deficit narrowed as well. Canadian employment fell 22,000 in January, the first fall in 6 months, but the cumulative gain over the previous 5 months was more than 180,000 jobs, so a 22,000 loss at the end of that is still consistent with a strongly performing labour market, and indeed the unemployment rate fell to 7%, a new post-2009 recession low. Canadian housing starts down sharply. In fact, they've been down 5 months running. Permits to build also fell sharply at the end of last year from record levels earlier in 2012. So there has been some, consistency there in the data, tapering off in housing activity from very strong levels. German exports up 0.3% in December. That's the first rise though since August. So still a weak underlying story. EU leaders in Brussels seem to have pulled together the next 7-year 2014 to 2020 EU budget. First time 50, 60 years of history that they've actually involved a budget reduction. I think it's something like their spending is going to be down over that 7-year period, something like 33 billion euros. That's not that much when to put it in perspective, that was a typical bailout tranche size for Greece. The Greek bailout, several hundred billion, was paid is being paid in various chunks through time, and one of those chunks or tranches, the last one was around 30 odd billion. So it's not really that much, but it is a big deal. It's something for the various leaders to go home to their domestic political scenes and beat their chests about. Cameron here in the UK has managed to secure a $1 billion reduction in the admin budget, cost of running the offices, staff and so on in Brussels. A success for him, but it's also meant that there's already strike action planned in Brussels related to that. Anyway, all of that has meant that heading into the close, it's just after 4 o'clock in London at the moment. The FTSE is up 0.2%. The French market up 1.4%. Germany's up 0.7%. Spain up 2%. Italy up 1.3%. And the Dow in the US up about 0.4% at the moment. It's just on 14,002. Commodity markets, the story there is sort of more mixed. There's a slight fall in the gold price, very marginal, $1,671 an ounce, but oil's up 2/3% at $96.48 a barrel, and copper's up 1% today. Aussie dollar, it's at 1.0325 against the US dollar. We had the Reserve Bank revise down its growth forecasts for Australia in their latest statement on monetary policy. That was Friday morning in Sydney. But the positive vibe in equity markets and markets more generally today has been supportive of the currency. Okay, I'll be back with more, same time each day next week.